The market hit pause, but is it just catching its breath before another leg up, or are we nearing major top? In today's daily market waves, we break down what's behind the stall and what's likely to come next. Let's evaluate the full signal set before the crowd even blinks. And today's agenda is packed, and we start with the Volatility Index as usual. So today's closure was bullish. Oh, was bearish. And now we can see that's most likely opposing doji, which will make the next move down on the index itself. And for the futures, we have also a bearish candle, bearish continuation, and the most important thing that we have now 2 days in a row closing below the 200 days moving average, which could be a very significant event. And if we look just at the bigger frame, what we are seeing is on a 2-day frame, which also closed today, a solid, strong bearish continuation candle on the 2-day frame, and for the futures, it's also a bearish continuation. So we are expecting next 2 days the volatility will further calm down. Now let's talk about the bond market. So this is an interesting thing here. So what we are seeing for different maturities, 2, 5, 10, 20, and 30 years. So they all formed strong bearish candles, and most likely this is the following 3 methods, for example, for 30 years yield. So we have a strong red candle, 3 very tiny dojis, and a strong move down. So the chances for a continued move down are fairly high. Speaking about the daily candles for 10-year yield, it's bearish on the daily, and so far the weekly looks bearish as well. So it's not a surprise at all, considering what we discussed in our weekly strategy digest. So we are expecting next couple of weeks to be bearish. Well, that's the perspective remains. Now let's have a look at the 20-year yield potential Elliott wave. So we were tracking 2 possible paths here. One is purple, red, so technically this should be red. Let me change the color. So another one is red, and another one is blue for a bigger consolidation wave. I think that blue has slightly better chances, considering the candles and some technical events. And once this wave is complete in a week or 2, we will see another strong wave upward. Now let's talk about TLT. So TLT is following obviously the bond market, and after a very strong bearish candles, against all odds, it's formed a green one. Well, if it continues to do so, it might form a bigger bottom. However, at this point, from the candles perspective, or let's say a 5-day frame which closed today, we cannot say that this is a bullish reversal. Most likely we need to see another candle in order to break this bottoming combo. And on the 15-day frame, which also closed today, I cannot say that the candle is bullish. Most likely it's a bearish continuation candle called the thrusting line, and the chances, even though we might see an attempt to move higher, the main direction right now remains downward. And I'd like to emphasize that despite all these green candles, the trends remain bearish on these frames, and obviously on the bigger ones, which we regularly discuss in our weekly reports. So speaking about the Elliott wave, this remains unchanged. Last week I discussed the possibility of a bigger wave, bigger corrective wave, a BC here, before moving lower. So this hypothesis remains on the table as the major one. So far, this wave upward that TLT is forming is not exactly an impulsive one. Most likely it is a corrective wave. So let's see how it develops. So the red path has slightly better probability right now. Now let's talk about the dollar and its perspective. So as I discussed yesterday, this green candle wasn't exactly bullish and it required a confirmation. So today we see why, and the dollar moved further down, technically negating this potential green, potential bullish reversal. So on expecting lower lows on the daily frame, the 3-day frame is not developed yet, so we would need to see a few more days until it is complete. On the weekly frame, so far the weekly candle is forming a bearish continuation one. If we look at the Elliott waves, so the wave remains unchanged, absolutely no changes here. I am looking for an expanding ending diagonal to end the last recent leg down, and once it's complete somewhere in this target area, I would be looking for a strong reversal. If we look at the Japanese yen versus dollar, so technically this is dollar to yen chart. It's very similar to what we are seeing for the dollar itself. So far it was an attempt to recover, but the odds are bearish right now for the dollar, and there is a very good chance we see a lower low in the nearest future. So it might take a few weeks to reach out there. And speaking about the long-term perspective, no changes here, as we discussed it way back in November 2023. So this is the same wave, and right now I think that dollar yen is forming a triangle of some sort, potentially that, but this could be also a regular flat wave if it moves a little lower. So far it stays in trend, and note that this is the monthly frame, which is moving very, very slowly. Now let's talk about commodities, and today we start with oil. So after yesterday bullish candle, today we had a bearish one. Technically it's a bearish engulfing. However, I am very cautious about it because it still sits about major support lines, and it is right on the 50 days moving average. So tomorrow will be a very important day. Either this one confirms or we can continue higher. At this point, I think that the chances for a continued move higher are more significant. And why? Because today oil also closed the 3-day frame with a fairly strong bullish candle. This is inside up, and it moved above the strong resistance, now support line. So the chances are for the bulls are better, and if this momentum persists in the next 2 days, we would be looking for a bullish closure of the weekly. If we look at the Elliott waves, so far oil has been moving horizontally for almost a month, and right now I'm looking for a very strong move. So there are two possible paths at this moment, and one of them is green bullish and the red one bearish. So far, I would say the odds are slightly better for the bulls, and especially if we consider some recent events. But again, we need a confirmation for this particular move, so it needs to break out of this big rectangle. So let me with it here. So this is the big rectangle that oil has been moving within for over a month. And once it's broken through, I think that we will have a move up or down for the size of this rectangle at least. Well, now let's move on to the next energy. It's natural gas. So as I discussed yesterday, the daily candle of Wednesday wasn't exactly a bearish reversal, and today's candle practically confirmed it. So it failed to reverse and it formed an inside candle. Most likely it will be resolved upwards. And now I'd like to emphasize that natural gas made a flip here, 8 by 20 EMA bullish cross by moving averages with a good chances to continue higher. And I'd like to say that for 3 days in a row, the price stayed above the 100 days moving average, which could also be a significant event. So right now, if momentum stays and it pushes just a little higher for the next 2 days, the weekly could form a reversal, a solid bottom here. Speaking about Elliott waves, the chart remains unchanged. I don't see a reason for now to make a change, and there is a possibility that this wave 3 is under wave right now. That's the most probable path at the moment. At the same time, I still keep the blue one here on the table, but it's less probable now. Now let's talk about gold. So what we're seeing here, as I said yesterday, the candle was likely a consolidating one, and today's candle just confirmed this hypothesis. So far, the trend is bullish, and I'm seeing better chances to continue higher for gold. The daily candle also for the 2-day candle today also formed a somewhat neutral candle, and the chances for the move higher. If this momentum holds, then we would have a very strong weekly closure like this, suggesting another move upward. So now let's have a look at the Elliott wave. So this is not clean at all, and I'd like to emphasize that this particular move, which overlapped with the beginning of wave, with the end of wave 1, technically broke the impulsive structure of the wave, and now I'm looking for potential ending diagonal, as I outlined here, 1, 2, 3, 4, 5. So we can see a spike here, or just a slow move up into the target area. So it remains the same, no changes here, and I think we outlined it in May 15th. So that's for gold. If we look at the GLD trust, the candle today, this is the 3-day candle. The daily was up and down, so the red one wasn't confirmed, and now we are looking for a continued move. And if we look at the 3-day frame, this is technically a continuation candle, better chances to move higher. And if this momentum holds for another 2 days, then the weekly candle will break through the green line, close the through green line, and also continuous advance here. Now let's have a look at the GDX miners. What we are seeing here is not as clean as for gold, for example. I'd say that there is another potentially bearish harami, and now it's a harami cross. It could be more serious. And the 8-day frame, so flip to another one. So the 2-day frame, it's not complete. 3-day frame so far looks bullish, and I'm expecting it to move higher. However, we need to consider this potential bearish formation on the daily frame. So once it recovers from here, we'll be looking for higher prices. And the chart also remains the same as we outlined it way back in May. This is the target, and this is an ideal target, $58 ideal target for this move. Now let's talk about the next one, and this is silver. So silver is facing a very critical task this week. So it needs to close above this line, 34.4627, in order to reverse this big red candle and open the path towards higher high. So if it fails, the consequences could be fairly brutal. Let's see how it makes in the next 2 days. So far, the daily candles are somewhat neutral, with slightly better chances to continue advance. If we look at the Elliott waves, so this is the chart that I discussed yesterday and cleaned it up a little bit. So there are two most probable paths at this moment as I can see it. So the wave 1, which started back in August, wave 1, then a big wave 2, and now it's another wave, impulsive wave potentially developing. So we can see 1, 2, and possibly wave 3. However, I have some questions about the structure of this wave right now. So far, it doesn't look very impulsive, but nevertheless, it's not confirmed. And if silver moves above this red line, above the new high, makes a new high, well, most likely the green count will be the primary. However, there is also a risk if silver breaks down and starts moving lower here. I would think that it's probably gonna be within a big rectangle. And let me change the color here so it's more prominent, like the blue rectangle. We might expect this move also for lasting for another several quarters or even a year. Well, that's the perspective so far for silver. If we look at SLV Trust, so far it is bullish neutral. This consolidation is somewhat concerning, but it's just a concern until we see a confirmation. And if SLV closes above this blue line on the weekly frame, it would be a reversal, bullish reversal, potentially making it to new higher highs, and also it will cancel this bearish harami formation that it made last week. So that's all about silver. Now let's talk about uranium. Uranium made a big move yesterday, so technically it was saved from making an impulse down, and I'd like to discuss it a little bit more. So far, this formation is not resolved, but I would like to say that the 5-day closure today was likely bullish. This is a little doji here, has better chances to move higher. And for URA, there are still better chances. If we look at the chart, so far the chart remains, I'm still thinking about either potential wave C here. Maybe it's not going to be that deep, but still it looks reasonable here. If it makes a new higher high, then I would consider this as wave 1. So far, this is not resolved yet. I think that we might see a little pullback here, little consolidative pullback before the next wave higher starts. If we look at Quad U energy fuels, it has a fairly strong closure today, while this on the daily frame it's somewhat neutral, but for the 5-day frame it's a solid bullish continuation candle and a freshly made 8x20 EMA bullish cross. I would say that energy fuels has very good chance to continue higher after a little pullback or directly. And the chart that we outlined earlier, this remains the same. So the blue path has a better chances at this moment. There is still a possibility of a drop, but I'm reducing its probability right now. So far, this could be a long-term trend for energy fuels. And speaking about Chemical Corporation, CCJ, so far it is looking bearish, slightly bearish, and on the 2-day frame there is also a chance to continue lower. However, I'm not expecting it to be a very deep reversal, most likely a corrective phase, few percent, until we see a restart of a rally. So that's all about commodities, and now let's talk about the stock market today. So it was quite interesting closure. So for SPY, for Triple Q, DIA, and IWM, they closed today with bullish or bullish continuation or bullish or minor bullish reversal candles. So SPY and Triple Q, they formed green candles, making a new higher high. And if we look at this is the 5-day frame, so it's technically bullish, and the 15-day frame also formed a bullish continuation candle. If we look at the daily is an on neck pattern, and this is in neck pattern, which is viewed as a bullish continuation candle. Somewhat similar for Nasdaq. Dow Jones formed in incomplete dark cloud cover, and the same happened for Russell. And I am expecting this to be reversed. Maybe we'll see another small candle down after I would be looking for a reversal. So if we look at the weekly frame, the chances for green closure right now are fairly strong, and they are supported by technical indicators. If SPY, for example, closes at this level or higher, it would be a clean reversal continuation candle. It's similar for Nasdaq. Dow Jones is still recovering, but it is above the major support points, support levels right now, and I would like to say that it's had a very good chance to continue above the 50 weeks moving average. Now let's have a look at the sectors. So sectors are not as clean as yesterday. So we have a bearish engulfing for the financial sector, potentially indecisive doji for the technology sector, and an in-neck pattern for industrial. Speaking about industrial, for example, I am still thinking this is a bullish continuation, because if you look at the 5-day frame, 5-day frame is clearly bullish, closing above the high of the previous red candle, and the 15-day frame is plainly bullish continuation candle. At this point, I am looking for higher prices. So somewhat similar for financial and the technology. Even the staples, even though they had bearish engulfing candle on the daily frame. I think it's kind of temporary. Maybe we'll see another day or two, but I'd like to say that this is most likely a temporary move. And this freshly made 50 by 200 days moving average cross for the staples is a very assuring indicator. Most likely we will see higher prices. So the healthcare formed a hammer or a gravestone doji, but it requires a confirmation. And if we look at the bigger frames, so far the chances for a green, this is a green candle, big green candle, most likely a bullish harami. For the 15-day frame, it's also a bullish harami. Very good chances for healthcare to start forming a bottom. All right, so let's move on to the large caps. So Microsoft formed a doji, maybe a spinning top today. Let's see how it closes in the next couple of days. However, if you look at the 5-day frame, the candle is bullish, and if we look at the 15-day frame, the candle is also bullish. We might see a pullback, but the chances for the next 15 days to be in green are significant. Meta is clean, bullish, no concerns here. Nvidia is trying to form a hanging man, but if we look at the bigger formation, this is a concerning one, another on the 5-day frame, but I think that 15-day frame is also bullish, and we can see a very healthy move here. Technically, it is a confirmation of the initial bullish move on the 15-day frame in the previous period. So Nvidia has a very good chances to continue higher. Alphabet, Google formed an inside up. Most likely, it could be a bottom. Apple, after 3 green candles, it formed an undecisive doji, but it's not strong enough to call for reversal. We need to see a bigger picture. So the 4-15-day frame, it's not healthy at this moment. I'd like to say that it has a good chance to move lower. For the 5-day frame, it's also bearish. So Apple is technically bearish compared to the other ones. Tesla also formed a bearish candle, bearish reversal, and I think it's confirmed. Yes, it's confirmed right now, but let's have a look at the bigger frame. So that today it's not closed today, but for 3-day, well, it's not confirmed. The reversal is not confirmed on the 3-day frame, and for 5-day, it's a bearish engulfing. So I'd like to say that we need to see more candles. So far, Tesla has a good chance to move lower. However, I cannot say it's a very strong one. And Berkshire Hathaway, it is moving lower, very strong bearish continuation candle. Now let's finally talk about Elliott waves. So these are the 3 counts that we've been talking about for a while, and all of them still remain on the table. Although I mentioned that the green one is becoming more probable at the moment, and while the purple and red still not zero, this is the current map. And for the green path, I think that we can see either immediate move towards wave 5, so it can potentially be started, or maybe we can see another wave down here, wave 4. But at this point, I'm not counting on it too much. So this wave looks healthy. So that's the short-term perspective for S&P 500, and now for Nasdaq, just to make sure it is aligned. So the chances, Nasdaq is in pretty much the same situation, a very similar, very similar possible waves, red or purple, and also a green one. So I think that at this moment, Nasdaq has slightly better chances to continue and make the green one. Well, that's about indices, and now let's talk about the feature of the day, and it's Microsoft. We haven't talked about it for a couple of weeks. Now let's have a look. So, important things. So Microsoft has been strongly bullish, and it is forming more possibly an impulsive way. What is important is that just a few days ago, Microsoft flipped 50 over 100 days moving average with an almost vertical move, and this is considered a strong bullish cross. If it continues just for 2 days, for 2-3 days, we can see a 50 over 200 days moving average, which is an even bigger bullish cross, a golden cross. So that the chances for Microsoft to continue higher are very significant. If you look at the 5-day frame, it closed today with a strong bullish candle, bullish continuation. So far, the trend, everything here is healthy, and Microsoft is looking for a continued move. If we look at the even bigger frame, we can see that Microsoft recovered from a short break of 8 days, of 8 periods moving average below the 20, and now it is moving higher. Very good chances to making a new higher high very soon. On the monthly frame, the closure was bullish, and the trend remains healthy. Now the question is about the quarterly closure. So in 25 days, we will know what happens next. If Microsoft holds the price at this level and closes like this, well, it will be definitely a reversal, bullish reversal, and we will be looking for at least one or more quarters of bullish prices. Speaking about the chart, at this point, this could be wave 3, but I think it has better chances at this moment to move slightly higher towards approximately 490 or so. And once this wave 3 done, wave 4 maybe horizontal. I'm not expecting it very sharp, and then wave 5 of 3, 4, and 5. That's the impulse that I think that Microsoft will be working on this year in the next couple of quarters. So that's the short midterm perspective for Microsoft. So far, the stock looks healthy, and we know it's normally a harbinger of the market moves. Now, let's talk about SPY. All right, so let's wrap it up. So we discussed it before, and SPY flipped long on Wednesday. What is today's status? You'll find out tomorrow afternoon. Swing Room members already have the signal delivered in real time. If you want it, reach out to help@investingangles.com for an exclusive discount on memberships. Education, precision, discipline, powered by signals that matter. And now let's wrap our today's discussion. In summary, volatility continued to cool, reinforcing the case for stability. The bond market remains choppy, still searching for direction, but our plan is in place. The dollar looks ready to print one final low before bottoming. And yen is unfolding long-term as expected. Oil gained momentum, solidifying its midterm bullish setup. Natural gas is practically bullish and began building a case for a breakout. Gold pushed higher, possibly tracing out a diagonal, and GDX held its course with no change to the roadmap. Silver approaches a major technical tests, while uranium avoided an impulsive breakdown and is now consolidating. The S&P 500 and major indices paused, but technicals suggest they are reloading for another leg higher. They also released a detailed special study on Microsoft, which could redefine the near-term outlook for tech. If you want to stay ahead, subscribe and hit the bell. These videos go out before the crowd even blinks, often hours or days ahead of market reactions. Members already have the setups. You can too. Just hit subscribe, turn on notifications, and reach out to help@investingangles.com if you'd like a discount on joining the full experience. This is Investing Angles. We chart the charts before the crowd even blinks.